Now, Reserve Bank Governor Philip Lowe is set to face the music this week. He's appearing before a Senate estimates hearing on Wednesday and a House of Reps committee on Friday. He's expected to be grilled over 9 consecutive rate hikes and the impact on households. Further to that is criticism of his decision to brief a private investment banking lunch last week. As business columnist Terry McCrann writes, Philip Lowe is in deep, almost certainly terminal trouble. Best in the business, Terry McCrann joins me now. Terry, he's been heavily criticised for months now, not just for the raising rates, 9 consecutive rate rises, but he made those ill-judged comments assuring Australians that rates weren't going to increase until 2024. Is he a goner?
Well, he's a goner when his term expires in September, Rita. He certainly won't be sacked early, and nor would I expect him to resign early. And apart from anything else, it's important that we get some structured continuity. I mean, in the old days, regularly, the governor would be succeeded by the deputy governor, and there was a process of the deputy would be brought on board, and he would learn the ropes, so to speak, and then he'd succeed. Now, the whole Reserve Bank is likely to be restructured after this review, which the current Treasurer himself initiated. So there's going to be a process of working through that and deciding not only who should be the next governor, but how that process will actually work. So, yes, that'll happen in the normal course. Now, I certainly wouldn't criticise Philip Lowe for those interest rate hikes. I think they were fundamentally necessary, partly because he made the mistake of cutting interest rates too low in the first place. We had this extraordinary period through COVID of basically free money. It was like the banks were behaving like carnival shysters. You know, come in and we'll give you $1 million and you don't have to pay any interest on it, almost. That was totally unrealistic. It was always going to change. Yes, Philip Lowe said, I won't be raising interest rates until 2024. But that surely, I mean, anybody going out there borrowing $500,000 and paying very little interest had to have some understanding that that might only last for 2 or 3 years. They had to be going up at the end of that process. The rate rises came sooner than we expected because the inflation came sooner than we expected, and certainly sooner than the Reserve Bank and indeed Treasury thought.
Well, I would have thought that talking about free money, the amount of free money we were just pumping into the economy with the government and its handouts, it was always going to be inflationary. It was always going to necessitate rate hikes. So for him to imagine it wasn't going to happen to 2024, I do question. But we're hearing now a lot about a massive mortgage cliff looming. Fixed mortgage customers, hundreds of thousands of them, are going to see their mortgage fixed rates expire. And for the average home loan, that could mean $16,000 a year more in mortgage repayments. Is the RBA fully appreciating the impact of these rate hikes and how it will impact families?
Well, yes, because they have been going fairly slowly in raising rates compared to the other major banks around the world. Our cash rate, our official rate, is at 3.35%. The Fed is nearly 5%, the US Fed. Across the ditch in New Zealand, the Reserve Bank there is over 4%. So I mean, you have to grant him that. He has been aware of that huge, the reality of those huge mortgages, and particularly what happens when they come off their fixed rates. I think there's a further problem, though, Rita, and it's probably going to be worse than you've just articulated, because when these loans were given in 2020 and 2021, APRA, the regulator, told the banks they had to lock into their calculations an expectation of rates rising by more than 2.5% sometime over the life of the loan. What APRA certainly didn't do, and in fact banks themselves didn't do, is get borrowers to factor in the reality that all these increases in energy prices, in gas prices, the general inflation that we've seen over the last 12 months, that was also going to impact on household budgets. So household budgets are already severely strained, and it's not just the fact that interest rates have been going up, not just the fact we've got this mortgage cliff, but the whole pressure across the board is really a big factor, which is going to really hit as we get into the second half of 2024.
And after the last rate hike, we had Treasurer Jim Chalmers saying that Treasury don't expect a recession. How did you interpret those comments? Is that something we should be worrying about, a recession around the corner now?
Well, they were probably the 9 most unassuring words that you could possibly express in the English language, saying that Treasury didn't guarantee there wouldn't be a recession, but didn't expect a recession. I don't know where, recession is a sort of we get into technical definitions of recession. Certainly the economy is headed for rough waters. Now, whether this, and how long those rough waters will last is not just a function of the Reserve Bank and interest rates. It's the sort of things you've been talking about, Rita. The government spending money like there's no tomorrow, and now perhaps trying to put some sort of a lid on that. And all those mandated increases in costs that have been imposed by government policy, particularly in the energy and gas space. These are not accidents. These are not something that came from heaven. These were caused by government policies, limiting reliable energy and limiting the ability to find gas and to get it to consumers.
Well, talking about silly government policies, I've got to ask you about this news from CBS in the States, which is reporting that for some electric vehicle owners, recharging is now more costly than filling up at the petrol station. Terry, do you think anyone has told Chris Bowen this sobering news?
Well, clearly not. I mean, he's so enamoured with the... they say that you can't hear electric cars coming, and electric car owners have been lulled into this false sense of suspicion that there is the power is free. I mean, you just plug it into some plug and you turn the plug on and, it must be free. It's not like having to actually buy petrol. And again, this reality, the underlying cost of power, it's not simply the fact that you have to power it somehow. The cost of power that they use, electricity, has gone up dramatically and will continue to increase precisely because of the whole mix of green policies.